Welcome to ETF Market Insights, a weekly show focusing on the evolving world of ETF investing. Each Friday, a new panel of thought leaders aims to provide investment education and insights, with the goal of helping you become an informed investor. Make sure to visit youtube.com/ETF Market Insights to watch previous episodes. And remember to hit subscribe so you receive a notification when we post new content and when we go live each Friday. Thank you for joining us today. Let's get started.
Welcome back to ETF Market Insights. I'm your host, Erin Allen, Vice President of Online Distribution with BMO ETFs. And today we're going to be discussing technical analysis. So we're going to be introducing some of the concepts and techniques surrounding this approach to investment analysis, and also discussing some considerations, of course, when applying it to ETFs. As always, before we get started, a quick reminder that we're not providing any investment advice or investment recommendations. Our show here is all about providing education for DIY investors here in Canada. So today I have the pleasure of being joined by my colleague Alfred Lee, Portfolio Manager and Investment Strategist from BMO ETFs. Alfred is also a CMT, or a Chartered Market Technician, so he brings a wealth of knowledge around technical analysis to the discussion today. So thanks for being here, Alfred.
No problem. Good to be here.
I'm also joined by Chris Graham, Regional Sales Manager from BMO InvestorLine, who's going to be walking us through InvestorLine's technical analysis related tools for their active traders, as well as their latest offers. So thanks for joining me, Chris.
Thank you for having me.
All right, so let's jump right in then. Alfred, let's kick things off with a bit of an intro in terms of what is technical analysis and really how does it differ from fundamental analysis, which most of us are more familiar with.
Sure. So I would say, when it comes to most of investors, especially, when you talk to portfolio managers or investors that, do it for a living, I would say most people classify themselves as fundamental analysts. So maybe I could just start with, what fundamental analysis is. So essentially what it is, you're dissecting, a company's financial statements, so looking at its earnings, expenses, revenue, and you're trying to determine, what the fair value of that company is. You're also, on top of that, maybe you're doing some industry analysis. So, if you're studying, let's say, Coca-Cola, for example, you will compare it to, others in the peer group, such as, Pepsi or other soft drink providers. You also may do some analysis on the macroeconomic environment and kind of determine how it's going to play out just in terms of not only just that industry, but also that company as well. And then you can just project, what the revenues are, what the earnings are going to be going forward. And then you establish what you think a fair value is going to be and whether that agrees with how the market is pricing it. When it comes to technical analysis is very different, where it is the study of demand and supply. So when you look at any asset, whether it's stocks, bonds, commodities, even when you look at, art or, real estate or whatever it is, demand and supply will determine what the price is going to be. So if demand outstrips supply, prices are going to go up. If you have the opposite, obviously prices are going to go down. So technical analysis is basically the demand and supply, and you're trying to figure out whether the price is going to go up or down. So overall, I would say fundamental analysis, the theory is that not all information is priced into the market. So if you do your research, if you do your analysis, you're going to be able to unlock value. Whereas when you look at technical analysis, the assumption is that all information is priced into the market, where you're trying to determine where demand and supply is heading, and therefore where the price is going to move. So as I mentioned, I think, most professional investors, they would consider themselves, generally from fundamental analysts. But I think when you combine the both, you really get a more complete picture of, where the stock is moving and where the market is moving.
Yeah, so definitely just another tool in the toolkit for you to evaluate stocks or ETFs in this case. Can you walk us through some of the common technical indicators that can be used, or the more common things that are used when it comes to using technical analysis of ETFs?
Yeah, for sure. I think, when most people think about technical analysis, they usually think about, some people just drawing lines on a chart. Believe it or not, when you look at technical analysis, there is actually a lot more than that. I would say technical analysis is actually very quantitative in nature, where you're looking at a lot of different measures. They try to quantify things like momentum, trends. They also try to quantify things like volatility. Also, they use things like volume as confirmation signals. So when you look at the actual toolkit or the actual number of indicators that technical analysts use, there actually is literally hundreds of different types of indicators. There is an element where you are, yes, drawing lines on a chart, but there is a very heavy quantitative measure or aspect to technical analysis.
More than just squiggly lines. That's good. Let's talk about trend lines and support or resistance levels. What do we mean by this, and how can these help investors identify potential entry or exit points for trading?
So this is where it comes to the squiggly lines, right? So having said all that, the technical analysis has a lot of quantitative indicators. There is an element where you are drawing lines on a chart. So for example, if you look at the S&P 500 right now, the S&P 500 has been trading in a very technical pattern. So for example, for much of 2022, the S&P 500 was trending down, and what you'll notice is that if you connect all the tops of the S&P 500, you see a clear downtrend in the price. So that's what we consider a bearish signal because you have lower highs. But then somewhere, at some point as we headed into New Year, what we saw was the price basically broke above that resistance level, and that's what we consider a bullish signal. And basically what that established was, shortly after the New Year, all of a sudden you got a support level. So all of a sudden we got higher lows. So that's basically what they're trying to do. When they're drawing lines on the chart, they're trying to establish demand and supply. But when you try to understand, where the concept comes from, you have to look at everything from, the concept of an order book. So everything that is exchange traded will have an order book. So the order book basically shows you the depth of, the buyers and the sellers in a balanced market. Demand and supply is going to be equal, so you have a range-bound security. But when demand outstrips supply, that's when you have prices going up. And in extreme environments like 2008, 2020, that's when you have supply overwhelm demand. So sellers overwhelm buyers, and that's when you see the price drop, and that's when you see a gap down in stock prices. So again, the squiggly lines essentially is an intuitive way of trying to understand demand and supply.
For sure. And then one of the more common approaches in technical analysis is the analysis of moving averages. So can you explain this concept and how an investor might read these?
Sure. So when you look at moving averages, it is a trending indicator or trying to study momentum. Moving averages, I would say, is probably one of the more basic ways of trying to quantify momentum. So the more general timelines that people tend to look at is a 50-day moving average, which is a short-term indicator. And then they have a 200-day moving average, which establishes the long-term trend. So what they try to do is, when the 50-day moving average breaches above the 200-day moving average, that's what's considered a bullish signal, because short-term momentum is trending higher than long-term momentum. So that usually is used in combination with other technical indicators to indicate a buy. That's what technicians consider or call a golden cross. And similarly, or conversely, when you have it move in the opposite direction, so when the 50-day moving average moves below the 200-day moving average, that's what they consider a death cross. So a pretty ominous name, but that's considered a bearish signal. But depends on what kind of investor you are. So the 50-day and 200-day moving average usually is used for kind of longer term investors. If you are a day trader, you could certainly kind of shorten up the timeline. So day traders may use a 5-day moving average versus a 30-day moving average. So it really is up to the investor. One thing is that the shorter the time frame, the more reactive it's going to be, and the likelihood is that you're going to get more false positives. The longer the time frame, the less reactive it's going to be. So you have to find a balance between how short or how long you want it to be.
And then it almost seems like there's a whole other language when it comes to technical analysis in terms of the specific patterns or formations that the analysts use. Head and shoulders, falling wedge. Please translate some of these for us and explain.
Sure. So I'm not going to go through, every single indicator, but I think, as I mentioned before, it's kind of just a more intuitive way of looking at demand and supply. So I would say, when you draw line formations on a chart, it tends to be kind of more that old school technical analysis. I would say, as I mentioned before, technical analysis these days is a lot more quantitative in nature. But when you are looking at those chart patterns, basically what you're trying to look for is, in a falling wedge, for example, you're trying to look for, the first rise up. You're looking for, the first batch of sellers are going to get rid of that stock, and then when it rallies back, you have more sellers selling, and then on the third rise up, that's when the residual of sellers move out of that stock or that asset, and then all of a sudden new buyers come in, and then it's able to move higher because that stock has gotten rid of all the weaker hands or all the sellers. So again, when you look at all those chart formations, it is a more intuitive way of looking at demand and supply.
And then let's bring us back to ETFs. How do volume and volatility play a role when you're looking at ETFs and technical analysis?
Sure. So when you look at technical analysis, I'd say, as I kind of alluded to before, volume is used as a confirmation tool. So typically what you'll find is, if you have a stock price that gaps up all of a sudden, usually what you'll find is what you want to see is you want to see that confirmed by heavy volume. Because what that indicates is that if a price moves up all of a sudden and you see a lot of people buying, whether it's a combination of a lot of retail investors or a lot, or a few big orders of institutional investors, what that signals to you is that the market is now pricing in intel that it didn't have the day prior to that. So if you see a gap up in a stock price, you want that confirmed by heavy volume. And similarly, if a price moves down and you see heavy volume, that is confirmation that the stock price is going to move lower. So volume from a technical perspective is used more so as a confirmation tool. In terms of how it's used in ETFs, I would say, when you look at technical analysis and all the different quantitative indicators, even drawing the demand and supply lines, it applies to ETFs. But the one indicator that I would say be hesitant in using it when it applies to ETFs is volume. And that's because, the structure of an ETF is very different from a stock. For stocks, for the shares outstanding, it's going to be fixed unless there's, a secondary offering or a share buyback. An ETF, on the other hand, it's open-ended, right? So similar to a mutual fund, that net asset value or that value of an ETF is going to be determined by the underlying basket. So even if you have an ETF that trades, 10,000 shares a day on average, and all of a sudden you get, 10 million shares traded, that liquidity is going to be determined by the underlying portfolio. So, for those liquid ETFs, even if you have heavy volume, it's not going to push the price up. So that's, generally not used as a confirmation tool, or should not be.
Yeah, that's a good point. And are there other limitations or challenges when it comes to using ETFs specifically with technical analysis that investors should consider?
I wouldn't say so. I mean, for the most part, as I mentioned before, ETFs basically just represent different exposures, right? So, whether it's different corners of the market or whether it's different asset classes. So you could obviously apply, technical analysis to, different parts of the market. So, the only limitation is just volume. That's the only one I'd be hesitant to use in ETFs.
And even with volume too, with the ETFs trading across, 12, 13 exchanges in Canada, you're not, depending on where you're getting that volume number from, it could be way off too. And a lot of places are only showing the TSX. Do investors typically follow one approach, or how can they blend technical analysis with other forms to make more informed decisions?
They could use technical analysis in a number of different ways. I mean, at different points of the market cycle, certain asset classes or certain areas will trade more technical at some points more so than others. So for example, as I mentioned, the S&P 500 right now is trading very technically. Also, when you look at certain asset classes like gold, gold tends to trade very technically as well. Every time it hits around 2100, there tends to be a lot of resistance there and a lot of sellers at that level. So it's almost like a self-fulfilling nature where, because a lot of people use technical analysis to trade those asset classes, they end up trading very technically. But in terms of combining technical analysis tools, I think you could use different indicators. But on top of that, as I mentioned from the top, combining fundamental analysis with technical analysis will give you a much more complete picture of what's happening.
And are there specific sectors or ETFs that are more conducive to be looking at? And maybe you could talk a bit about intramarket analysis too, looking at fixed income versus equities and that type of thing.
Yeah, so as I mentioned before, certain asset classes will trade more technical than others, gold. And then sometimes, certain indicators may work at different times better than others as well. When it comes to intermarket analysis, I would say intermarket analysis, is one of the more useful tools overall when it comes to technical analysis, especially when it comes to things like portfolio construction. So not just looking at stocks, but also looking at the entire portfolio. So intermarket analysis basically is the study of asset classes. So under the theory, there's three major asset classes: bonds, stocks, and commodities. Each of those asset classes will perform very differently in different environments. So stocks will perform well in a growth environment, bonds perform well in a deflationary environment, and commodities in inflationary environment. So what you want to do is run relative strength of each of those pairs, and then understanding how they're trading relative to another will give you insight in terms of how to properly overweight and underweight your portfolio.
All right, and to finish off, are there tools that are publicly available that you would point investors to, or they could?
Yeah, I think a lot of the online brokerages will have a lot of technical tools, which I think Chris is going to touch upon later. But in addition to that, I think there's free websites such as Stock Charts. Stock Charts, I would argue, has very powerful technical tools, even better than my Bloomberg in many ways. But free tools like that, and also the free tools available at your online brokerage.
Awesome, thanks, Alfred, and good segue. Chris, thanks for your patience. I want to turn it over to you to walk us through BMO InvestorLine's tools, your active trader tools, your technical analysis tools, and also your latest offers. So take it away.
Thank you, Erin and Alfred. Yes, this is a great opportunity to discuss our active trader platform, which we recently relaunched for our 5-star customers. Our active trader platform is designed to help elevate that trading using a new interface, which is now a web-based platform. So for our customers that are looking to do a little more of this technical analysis, this new program will provide real-time streaming for level 1 and 2 market data, real-time streaming options for both stocks and options, and it will provide advanced charting methods like Alfred was talking about, with over 100 pre-built indicators and 30 drawing tools for you to do your own investing with technical analysis. This is, again, part of the 5-star program that's involved with BMO InvestorLine. So not only would you get access to this real-time data software inside, but you do actually get a whole bunch of extra bells and whistles that are involved with the BMO InvestorLine online platform, including preferred interest rates, professional level research tools, not only on the technical analysis, but on the fundamental analysis as well, and a dedicated 5-star support team so that you can work with our best to make sure that you're investing with confidence inside of your accounts. Again, this is a ETF seminar, so I always like to remind our InvestorLine clients or clients that are thinking about investing in ETF products that we do trade over 90 different ETF products commission-free on our website, which includes the BMO ETF suite, iShares, and Vanguard. So being able to access this and help you with your trades inside of your platform. One of the things that we do wish to present to everybody today that is interested in learning a little bit about our online platforms is we do have a special promotional offer for those of you that are watching today with both our InvestorLine self-directed side and our Advice Direct product service. So again, the promotion for our self-directed side, we're offering customers that have watched this show and are looking to invest smart with us to get $4.95 equity trades and take advantage of those non-commissionable free ETF trades. So there's the information regarding our Invest Smart promotion that's available for you there, as well as our Advice Direct services for those of you that are looking for a little bit more on the fundamental side information that could provide you access to buy and sell recommendations online, better interest rates environment out there, providing you analysis tools, and keeping you the performance tracking is all available, and both promotions are going to be on the website, so you can take a look at that. Again, thank you very much for allowing me to come on board and talking about our InvestorLine services. Anytime that you have any questions or concerns about the services that we can provide you, please feel free to get in contact with me. My contact information will be there. Again, chrisp.graham@bmo.com. And I look forward to answering any questions or concerns that you have regarding online investing. Erin, back to you.
Awesome. Thank you so much, Chris. It's clear that you guys have invested a lot in your active trader platform, and it's looking really good. So thanks for walking through that. That caps off another great week of ETF Market Insights. Alfred, Chris, thanks again for joining me. I appreciate your insights and all of your knowledge around technical analysis. Next week on ETF Market Insights, Alfred will be back, and he'll be providing his quarterly portfolio strategy review. So you'll see this coming out on our channel every quarter now. Alfred, as our investment strategist, has been running an ETF portfolio, model portfolio for over a decade now, and each quarter he provides his market views along with the tactical shifts he's making within that portfolio. So I think it really provides investors valuable insights into the markets and just helps them make more informed decisions. So his report is available on etfmarketinsights.com. It has been used by institutions and advisors for years now, and we're now bringing it to you, to the DIY investor. So hopefully you can all tune in next week. Thanks again for joining us today, and we'll see you then. Bye for now.
Thank you for watching this week's episode of ETF Market Insights. To stream any previous episode of ETF Market Insights series, please visit youtube.com/ETF Market Insights. Remember to hit subscribe and sign up for alerts so you know when we post new content. Also, we invite you to visit our accompanying website for ETF tools, education, and much more at etfmarketinsights.com. Once again, thank you for watching. The session provided is for information purposes only. Any reference to a particular company or product is for illustrative purposes only and should not be considered as investment advice or recommendation to buy or sell. Particular investments and/or trading strategies should be evaluated relative to the individual's investment objectives, and professional advice should be obtained with respect to any circumstance.